What's cooking, Gumbo Nation? You're listening to Mortgage Gumbo with Dwayne Steiner right here on iHeartRadio. And I'm your host, Dwayne Stein, the Gulf South Mortgage Authority. 8+ years of bringing education and options to you, the Gumbo Nation. If you've got any questions or you want to join the show, 504-260-0995, or you can shoot an email to info@mortgagegumbo.com. On the show today, we got a great show planned for you, as we always do. This will be the greatest show ever until next week's. So just to keep you posted and letting you know what you're in for here. So today, talk a little bit about blended rates, right? And the reason being is getting a lot of people starting to call me for refinances. So we're going to talk about that. Also, got some new data numbers. We're going to share that with you as well, with the data numbers, exactly what's going on with foreclosures, home sales, who's buying, where we're headed with interest rates, where's that going? So just a lot of data, a lot of information as always. And then next week we start our credit awareness month. So those shows are going to be geared on, we're going to talk a lot about credit, but we're also going to have Total Home Authority member the second week in February. The Queen Colette Biedenkopf is going to be joining us. And then Total Home Authority member Florida Lee Title is going to be joining us as well. Owner Jeff Leschere and CEO Dawn is going to be joining us in the last show of February 25th, I believe. So a lot going on. I know it's Mardi Gras season. Things are getting cranked up. Excited today. Hey, listen, if you need something to do, it's too late to sign up. It's your fault. If you didn't, we've got 50+ teams today. It's our first annual Lakeshore High School Cornhole Tournament. So very excited about that. That is going to kick off, starts at 11 o'clock. It's going to run from 11 to 4. So if you want to come out and just see a bunch of teams competing there, it's great. The grand prize is $500. But even more so, we've got some amazing raffles going on. We're going to have 50-50, fantastic food. And also, if you're into it, and I don't know how many people are in this area, but if you're into drinking, we're going to have some drinking options as well. $20 all you can drink. Pretty good stuff there. So really, really excited about that. So when we get out of here today, after we fulfill our obligations, then we'll be over there and love to see you. It's at the Lions Hall in Mandeville. It's posted on any of my social media sites. So check that out, but should be a very, very good time. So with that, hey, bring in my esteemed co-host, James Parker. James, welcome to the show.
Yeah, good to be back. And it's amazing how just because it showed up on TV, how that has legitimized the now sport of cornhole. It is no longer just some game you play in your backyard. Oh, no, it's a sport now.
Yeah, it is. And there's scholarships on it. There's, it's on TV all the time now. So it's become that. And I just figured cornhole was going to be a little bit easier than doing the axe throwing, right? I just figured cornhole would be a little simpler. Let's see how this goes. And then we can maybe get into the axe throwing realm of things later on.
All right. You ready to get into the news? Because the news is kind of tough.
Yeah, let's go, man. Yeah.
All right. Well, we did a great hump day holla. And this is something that even since we did it, I heard more people say the same thing. And we're dealing with the people whose monthly mortgage payment has jumped up. Now, it's not always the mortgage itself. Sometime it is. But we were rolling through all the different factors. And I liked how you didn't just give the bullet points on reasons why your monthly payment's jumping up. You also had a solution for basically all of them.
Yeah, I mean, look, a lot of folks, we're getting a lot of phone calls stating, and that's why, look, we're bringing the Queen back in next month, and there's a lot going on. Number one, the biggest reason why you're seeing these payments outside of, look, if you've got a balloon or something like that that's coming due, that's a whole separate ball game. You know that that's coming due, right? That's why that payment may be changing. But when it comes to your mortgage payment, you did a fixed rate mortgage, right? That stuff's not supposed to change. This is what I was budgeted for. I shouldn't have to sit here and wonder or worry. So naturally, when that changes, I'm getting a lot of calls on that and going, hey, you told me I had a fixed rate. What the heck's going on here? Totally understand. And I want you to call. You should call. You should never, and even if your mortgage isn't with me, I've got no problems answering some of those questions, right? Because this is your most valuable asset. But one of the things I'm getting a lot of hey, why did my mortgage payment go up? Well, what you've got that's going on right now is number one, as your escrows come due, and what an escrow is that's your taxes and insurances that you pay inside your mortgage payment. So every year when it comes due, so you don't have to fork out this check, right? Hey, your taxes and insurances are paid. It takes a little bit of that money each month, and that's what makes up your payment, right? You have when it's a payment, let me just kind of go over this in detail, James. When you have a mortgage payment, it's PITI. So that's principal, interest, taxes, and insurances. So I handle the principal and interest side, right? Taxes and insurances are something else. Now we've got our total home authority folks and all that we help out with. The taxes kind of are what they are. So your taxes are not going to change normally on your because you only get assessed every 4 years. And Orleans Parish, for some reason, is different than everybody else. There's 47 parishes or 48 parishes, and Orleans Parish is always a year before everybody else, which I think we had our assessment last year. So when that payment is changing, it is not going to be your because of your taxes. It's not going to be if you have a fixed rate because of your mortgage payment. So, what are we trying to do? We're trying to remove what in the heck could it be, right? And what that normally is insurance. So now when you're dealing with everything that's going on in the state of Louisiana, especially, but throughout the Gulf Coast, insurance premiums are on the rise because of the Idas, the stuff that happened in Lake Charles. All these insurance companies are pulling out. And I'm going to let Colette talk about this in a couple weeks on the whys. She'll be able to give you the whys. But when it comes to your mortgage payment, every year your escrows come due. And normally that little bit of money that's being taken out of your payment each month, kind of imagine it sits in a top drawer and the lender sends that payment to your insurance agent every year. Well, what's happening now is when these renewals are coming up, they're very, very expensive. Policies are going through the roof. They're doubling. I mean, Citizens, which is Louisiana, is supposed to be the insurer of last resort, is up over 63%. So I know I'm feeling it as well. Everybody is. I got the same exact thing that came to me through my mortgage. But what I want you to understand is call your insurance carrier, see is there anything that can be done. The other thing that you had, while a lot of people are like, well, my insurance, it wasn't even due my escrows, and then I got hit with this gigantic payment. Yeah, that's because a lot of insurance companies bailed. They have just closed down shop. They have bailed out in Louisiana. It's not because they wanted to, but if you can imagine, insurers are insured, right? So those insurers who really control everything, the folks who insure the insurance company are like, no, you got to get out of here. There's no funds left.
All right, we have
And
the comment here from Facebook. Emil says, my mortgage payment went up close to renewal with a lot of insurance companies backing out and left with only two to choose from.
yeah, I mean that's exactly what your options are there. So I mean that's where we're at right now. We're in a state of flux here in Louisiana, especially. Mississippi, for some reason, it has not affected. The loans I'm doing in Alabama, it has not affected. Texas, it's affected. Louisiana, Florida, Tennessee, doing loans there, not affected. Florida's been affected big time because of lawsuits. So now what you've got to do is we got to figure out how do you get these folks back? Or how do you get the new folks to come in? But more importantly, the folks that do come in that are reputable, that can manage this. So if your insurance payment's going, I mean, if your mortgage payment has gone up and it's scaring you, first thing you do is call your insurance carrier and ask them what happened. Chances are they may have reached out to you, but if they haven't, ask them what's going on and if anything can be done. I mean, like Emil just stated, chances are it's probably pretty minimum or minimal what can be done because we just don't have options right now. There's just absolutely zero options. So don't panic. Look, get PO'd, get frustrated. I'm all about that. I get it. But just understand, if you look at that statement, it's going to say that you're on a fixed rate. It's not the mortgage, it's going to be the insurance. So that would be the first thing. And that's going to probably answer, when you've got that first question, that's probably going to answer questions two through 10 as well. So good stuff. I know since we had that on Wednesday, we've gotten a lot of questions. I could continue to get those every day because as things come, as they renew, right? And right now, these are people that are calling, going, "What the heck happened?" Guess what, James? They're all on the 2.5%, the 3.25%. So the biggest thing, and this is what I want everybody to understand. And I get your number one question when you call me, "Hey, what's your rate?" The rate we can fix later on. What you need to be finding out is, hey, what do I qualify? And then let's go see what property I'm looking at. What is the insurance on that? Need to stop worrying about the interest rate right now and seeing what your payment factor is going to be in the place that you're buying with your insurance, because that's running a lot higher than most people realize. And that is what I need to know as well when we're trying to put together your budget when we're doing our fast track approval. All right, on the other side of the break, hey, we've got a lot to cover. We've got housing data, existing home sales, 11 straight months. We told you last week we had a solid December, but it doesn't mean it didn't shrink. So we're going to talk about existing home sales. We've got numbers, and numbers. Like I said, I'm not just sexy and big boned, as my grandmother said. I'm a nerd. I'm a nerd. I don't necessarily look like one like James does sometimes, but I am a nerd. And but we got a lot of that, more of that information to come. So if you want to join the show, info@mortgagegumbo.com or 504-260-0995. A la di da di.
You want to try the brick again?
It's still saying offline on my end. Yep.
So he doesn't have a profile. He needs your IP address. He said just type in what is my IP on your computer.
All right. All right, you ready?
Yep.
Hold on one second. Let me mute this off of
Yeah, I got you. And look, hey, take disconnect from brick one and just hold tight. Just disconnect.
all right.
Don't connect to anything.
Hold on. James, mute us on the other stuff.
All right, I got you on, but you're muted. Thanks for sticking with us. I know it sounds fine to you guys, but over the radio, we're talking through a phone line because the brick won't connect. Thumbs up when you want your audio back on, Dwayne.
All right.
All right, you're back.
All right, good. You hear me?
I do.
We're back. You're listening to Mortgage Gumbo with Dwayne Stein right here on iHeartRadio. If you've got any questions, give us a call, 504-260-0995. All right, let's see. Let's jump into really kind of the topics this week. And what I wanted to run by you was some foreclosure numbers. And, these are, will we see these? Will foreclosures get to us? We talk about this all the time is sometimes there's good turnover, right? There's things that you've got to have, and we don't want to see anybody lose their house, but sometimes if it needs to happen, it needs to happen. And, my question is, will we see some of this? A lot of these big investors, we've talked about it. These hedge fund companies are going straight directly to the banks. So we're not seeing all these foreclosures. And I talked to several investors. They're not getting to them, right? However, here's what we're looking at with the foreclosure rate, right? The 30-day foreclosures, and this is all since October. So the last quarter here is up 3.5. I'm sorry, foreclosure rate is up almost 4%. 60 days has surged to 11%. 11%. Now, 90-day late is only up 0.2%, and that's 550,000 households. But guess what? If 60 days just surged, unless people get it fixed, all of a sudden, the next thing we're going to see is those 90 days. So we're keeping an eye on this. Look, we hope it stays low, but what are we looking at? We're now about 18 months outside of when they stopped the moratoriums, where they stopped all the forbearance stuff, where people didn't have to make payments. So now we're starting to see who can hold on, who can't. And that should allow, in normal times, that will allow us to see a little bit of inventory. Again, we're not wishing for anybody to lose their home, but what that's going to do is that's going to open up some inventory options, which is more home sales. All right, existing home sales, James, we've been talking about this. Let me remind people, existing home sales, and this is kind of why I bring up foreclosure and why I bring these up. Existing home sales has shrank for 11 straight months. So almost 1 year. And with an existing home sale, again, while you may be buying a house that's new to you, it just means somebody lived in it before. So imagine it's like a used car, right? Hey, somebody else, you like it. It's awesome. It fits your needs. You love it. You love the area you can drive in. But somebody else drove it before you. Same thing. That's what an existing home sale is. So what you're looking at is these single family home sales, they're declining. And why? We've been telling you the whys on this. The why is people are sitting with low rates. They jumped in 2021, whether they bought then or refied then. It's going to take a lot for that person to move on something. And those things are what we've covered at nauseum here, and that is, what we're looking at, the 4Ds, right? Debt, death, okay? You've got divorce or distance, relocation. Those are the things. So when you're looking at existing home sales on the decline, this is normal. This is normal. That's why, as these rates, if they can recede just a little bit, you're going to see that open up, because maybe somebody listening to me right now that's got 3.5 or 4% goes, hey, you know what? To go get my dream home and be in an area in a school zone where I really want to be. James, maybe they say I don't mind paying 1% higher, right? Because then I'm getting everything that I need, and that's where I want to be. Maybe that's my final move, and I could get in and then figure out what we're going to do down the road from there.
Well, the 11 straight months is the important part of that statistic, because few trends in the market are this definite. 11 months in a row, you've got to be kidding me. So you got to be asking yourself, how much further can this decline? Because it can't do it forever. It has to bounce at some point. And then you start to play these little games in your head where it's like, well, if I'm trying to, sell high and buy low, and do I need to strike while the iron's hot? While everyone else is fearful, I need to be greedy, sort of, that mindset. And maybe if you've been waiting on the sidelines and you feel like you're getting a raw deal, you're just looking at the interest rates. You're going to have a little bit easier time finding a house, getting a house, winning a bid for a house when things aren't as frothy as they were this time last year.
Yeah, absolutely. And that is the biggest thing that, and look, that kind of goes in with everything that I'm starting to see. Affordability is down. And what I mean by that is that's a good thing. And why? Because we've started to see the rates recede a little bit, right? So when you're not quoting somebody 7.5 and you're giving them 6.5 or 6 or whatever that number is, the payment's lower. So as people start to see that, and when we start talking about getting you through these tough times and these uncharted waters, right, that you're used to, I told you I've managed through this, but when I say there's rays of light coming through those clouds, that's the part I'm talking about. That's that today, if you call me about buying a home, you're going to pay less than you did 3 months ago. You're going to pay less than you did 45 months ago on your mortgage payment. That's not saying the house is cheaper, but your mortgage payment alone is going to be cheaper. And we're seeing people start to be able to digest that. Because all we want when it comes down to interest rates is we just want to see stability, right? That's the biggest thing we want to see. Peaks and valleys aren't good. Peaks and valleys aren't good when it comes to mortgage rates. We want to see stability, because that's going to help the market understand. That's going to get people excited. And no matter what, in my opinion, owning a home is always going to offer more options than being a renter, because you can't control that. You can't control rents.
Well, I'm glad you're mentioning stability, because one of the notes I have for the rate watch segment coming up next is the fact that I feel like the rates have sort of settled into this groove, sort of in the high fives, low sixes, and haven't moved out of it. For a while it was at rock bottom, then it was on the way up to that August high of above 7%, and then it was falling, but it's actually been here for a while. And I know feelings don't really matter in the financial world and in the business world, but I feel like interest rates have sort of gotten comfortable in this area.
Yeah. So, I know we're heading into the break, but that exact comment, we'll share that on the other side, because I'll give you an idea of where we've been all month, and you'll be able to really just kind of see exactly where it's at, and sort of what loan types or what loan programs you're kind of getting your wins on right now. So we'll talk about that and more on the other side of the break. Hey, if you want to join the show, 504-260-0995, or shoot an email to info@mortgagegumbo.com.
All right, I'm gonna grab a coffee.
All right, Bob.
Any luck with the brick?
It's still timed out.
You
Hey,
want me to mute you?
just letting you know it's still offline on my end.
Okay. I'm muting you. How much time?
I'm not sure.
Just checking.
You can keep that music on. I unmuted myself. We're good now. Yeah, I got you. Yeah, but James can. Yeah, James usually handles that. But I mean, oh, I got you. Yeah. All right. So do I need to tell James to call Tom? All right, James, call Tom.
Okay.
All right. Yeah, something about he needs to, and I'm not muted, but and that's fine. It is what it is. Hey, folks, what's up? Hey, you get to see live radio. Something about a MAC address or something. If you need to step away or whatever, bro, just. Oh, all right. Hold on. Hello? right. What's up? Welcome back. You're listening to Mortgage Gumbo with Dwayne Stein right here on iHeartRadio. Hey, if you want to join the show, 504-260-0995, or you can shoot an email to info@mortgagegumbo.com. Hey, if we're sounding a little, it sounds like coming from my phone here, a little technical stuff. So, but we're fighting through it because we're bringing you all that good information. Hey, if you're first time to the show, welcome. Welcome to the show. 8+ years of education and options. This is your home show. Hey, home away from the show, and it's getting more and more popular as we start to see these rates recede. That is snapsendandsave.com. Snapsendandsave.com. No cost, no obligations, just answers, folks. It's that easy. It's that easy. So let's get into our weekly segment we like to call Rate Watch. Rate Watch is brought to you by Tito's Handmade Vodka. It's America's first handcrafted vodka. So before the break, we were talking a little bit about, hey, where we at? We've been telling you interest rates will recede. It's not going to be at some heavy decline, right? It's going to be a slow and steady sort of process as we work through the year. We're going to hear next week, what is the Fed going to do, right? Expect them to raise it a quarter, but we're going to see how that stuff's going to continue to have effects. But we're talking about really about stability, right? That's what you as a consumer want to know. And the reason you want to know is you're not worried about, hey, a rate's going to go up more, right? I can tell you, we've already hit. I told you a couple weeks ago, we waved by to those 7.5% interest rates. So that's not necessarily your concern. Your concern right now is what? It's, oh, I don't want to miss, right? I don't want to miss out. So what we want to make sure is when we're looking at this is we want to see some stability. You want to know that, all right, hey, we're in a spot where I feel comfortable to go to Dwayne, go to snapsendandsave.com and look at purchasing a home. So, James, welcome. And just kind of this is what we were talking about with the stability piece, right? So listen to this. 30-year conventional in the beginning of January was 6.20. Today, we're floating at the same exact rate as of today, 6.20. Right now, when you start looking at a 15-year term, 15 was 5.70. That's now at 5.26. So we've seen that head in a positive trend. I don't think anybody out there is still saying, hey, yeah, I'm ready to knock down the next 15 years with 5%. So I get it. Right. But what does that tell you? The investors are wanting you to push towards, right? That 15-year note. That's what that's telling you. Okay. FHA was at 6%. That's at 5.77. So within a 0.25% there. Jumbo 560. That's at 5.70. VA 6.05, 583. And in the 5-1 arm, 6.21 is now up 6.25. So this is the things that when you're looking at it, we're talking about the stability. Of course, we want to come on and be able to say 5, 5, 5, right? That's going to open up a whole new Pandora's box when it happens, which is, again, why James and I doing our podcast, everything that we're doing, that's why we keep saying, get approved now. I can tell you this, we're getting more people fast track approved now than we have probably since last July. And the reason being is people in July, new rates, they started seeing them come up and they like, let me get a house before these things peak out. Now what you're seeing is people want to be ready. It costs you nothing to get fast track approved, and it's good for 120 days. So that way, if that house does pop up, bam, you're able to react and you're able to take advantage of that and get the $5,000 guarantee that comes with it. So, James, I think it's kind of like you said, seeing a little bit more of that stability. Of course, it's not where we want, but folks, please understand, because again, I'm having conversations with people each week. Well, I want to wait. Okay. And again, that's your prerogative. But what are you waiting for? If you're waiting for home prices to plummet, it's not going to happen. If you're waiting for 3 to 3.5% rates, it's not going to happen. So I just really want you to understand, what are you waiting for? And that's where a free conversation isn't going to hurt you. And most of the time, by the time I'm done with some of those conversations, people kind of understand, and at least they have more direction to head into, James.
Well, these aren't high interest rates. These are only high interest rates compared to that ridiculously historic low that we had recently.
Yeah.
And so, like, what we're talking about next is people that are getting crippled by credit card debt. And one of the good fixes for that is to do a cash out refinance on your mortgage, sort of reset it. And, I think if you're waiting to do that because, oh no, mortgage rates are 6%, I think you're being very, very short sighted, because historically speaking, these are entirely reasonable, if not low interest rates for a 30-year borrowing term. And it's more important to get out of that credit card debt and reset that at a mortgage interest rate than continue trying to rope it up or hoping the mortgage rate goes down so you'll get a slightly better deal.
Well, and you bring that up, and that's something where, and it's impossible to get into on radio, right? But we have a blended rate tool. And what a blended rate is, folks, is, I mean,
Hey,
this
can I
is something.
confess something? You said that on a few shows before, but if you ask me right now what's a blended rate, I don't know. What's
And
a
that
blended
and that
rate?
and that's what I want to explain. A blended rate is, if you take all of it's almost like a gumbo, right? If you take all of your loans and you throw them in, and you come out with something that's better, right? You take chicken, sausage, seafood, you throw it all in, you put it all in one pot, and it comes out better. That's what a blended rate does for you. So you may have a 3.5%, a 4% mortgage loan, but what are your credit cards at? Do you have second mortgages? Do you have HELOCs that are going up? What we're doing is we can put that all together. We have a calculator, and we can let you know if it makes sense to look at refinancing that debt right now, right? And if it makes sense for you, and can we save you money, right? Because at the end of the day, it's no matter what. I've learned this a long time ago. Bread and milk is not bought with the number on a piece of paper. It's bought with the money in your pocket. So I'm not sitting here saying, hey, jump on a refinance right now. It's right for you this second, right? But if you're going through a tough time, as these credit cards start to mount, and they are, these payments are started, excuse me, these payments are starting to nickel and dime you a little bit. You're sitting on a ton of equity. So maybe visiting Snap, Send, and Save, clicking on refi, right? And us looking at it, putting something together for you. Then maybe you go, hey, listen, okay, two people this week. One was at 3.5, one was at 3.75. I'm saving them $600 a month, and another one $380 a month. So to you, you may go, oh, it's not worth it, but that number on a piece of paper is not helping you live. And it looks good and it sounds good to tell your neighbor, but you just got to look at, what is the Fed trying to do right now? They're trying to slow everything down, right? They want to make sure. So that's why we're seeing these Fed rates. And the cost of these Fed rates is what? It's short-term loans. We told you this. And what are the short-term loans? That's your revolving debt. That's your credit cards. That's your auto loans. That's all these factors that are coming into play. So those are the things that, as we go on the other side of the break, we've got some credit card numbers. We're going to kind of put the proof in the pudding, so to speak, or whatever that statement is there. to kind of give you an idea so you could see, because a lot of you, and me included, you're still living that same life before the Fed started raising and hiking those rates, right? Well, we're going to kind of explain to you and give you some true data, because that's what we're about here. This show's based on data and facts, right? So not headlines. So we're going to talk to you a little bit about that and those credit cards, and why, again, I'm not saying everybody should run out right now and refinance, but is it right for you? That's where we kind of go over the blended rate, and we can show you that. You're listening to Mortgage Gumbo with Dwayne Stein right here on iHeartRadio, 504 260 0995.
So who you like in the conference championships this weekend?
I
Philly,
mean,
San Fran. Who you got?
I want Bengals and Eagles. Can't have some dude that
Those
gets
certainly
into
seem like the better teams.
can't have quarterback, some dude that gets in 7 games and wins it all, makes the league look too easy, right?
That is a wild story, because when does that ever happen? The closest you have is like the backups, like when it was Jeff Hostetler versus Frank Reich, the Giants
Yeah.
versus the Bills. Those were two nothing quarterbacks. That might have been the sorriest quarterback split in the Super Bowl ever, but it is rare.
Welcome back. You're listening to Mortgage Gumbo with Dwayne Stein right here on iHeartRadio. One segment left. Hey, if you want to join the show, 504-260-0995, or shoot an email to info@mortgagegumbo.com. If you're hanging out with us on social media, we see it looks like got quite a bit of people. Awesome. Hey, if you're looking for something to do today, the weather is nice. Head over to the North Shore, head over to Lions Hall, Lakeshore. We've got our first annual cornhole tournament. Doors open at 11. We've got 50 plus teams signed up. First place is 500 smackers, but even better than that, we've got some 50-50s. We've got some great raffles going on. We've got some food, some drinks, all that kind of good stuff. So get on out there. Come watch I've never been to a cornhole tournament, so I'm looking forward to it. And come on out and hang out, and there's absolutely no cost to get in, but some great prizes and stuff like that if you want to take advantage of that. So, all right, with that being said, James, you kind of, look, we're talking about, and again, I want to make sure I'm clear on this. Refinancing, like my clients, for instance, that I helped out, I let them know when it's time, right? But I have all their information. I'm looking at it, right? What I'm mainly talking to is, hey, for that client out there that maybe just isn't aware, and things have gotten a little bit tighter, right? Things have gotten a little bit more strappier. Well, with that happening, what's happening as this is going on, maybe you just don't realize, you see these memes about eggs and the cost of eggs. Well, guess what? Somebody's paying it, right? milk, all these things. Costs are up everywhere. No more 0% financing on autos, none of that stuff. So when you're looking at that, where are those costs coming from? So, you know, what we kind of wanted to share with you is, and maybe you're not aware of this, but all we told you is as the Fed begins to hike rates, it was going to affect those short-term loans, and that was your auto loans, which no more 0% finance. That was going to be your short-term loans, like your credit cards. Well, we've kind of got some data, James, and let's kind of go through that because you as a consumer, right? I deal with this every day, but what did it bring? What got brought to your attention? I want you to share with the audience sort of because you're one of them. What did you see that was sort of um, an aha, not an aha or a, oh my moment for you?
Well, the first thing that me and the guy listening are going to share is the fact that we both think that we are in debt, and we're probably doing better than some people, but a lot worse than other people. But I think I'm surprised that I'm doing better than average. I have less debt than the average American has. I figured I was on the wrong end of that stick. And so, look, the numbers break down in a sort of fascinating fashion because when you roll in the total average household debt, that's mortgage and everything. So you count all these old people that have like their houses paid off. Your average household debt is 165,388. Now, I'm
Right,
a little above that, but I just bought a house last year.
right.
So if not for that, until I did that, I was actually below that number. I was doing great. When you look at credit card debt, the average per household, this is an astounding number. $17,000 worth of credit card debt rolls through the average household every month. Now,
That's a
that
lot,
number,
James.
say it again.
That's a big number, man.
Well,
That is a.
it's a scary number, but it breaks down into something a little better here.
I agree.
Because there's a lot of people who are more responsible with credit cards than I, and they run up their credit card every month, and then they pay the whole damn thing down to zero. You people are amazing. You are gods to me.
Right.
But if you take out those people, and that's from the total credit card amount, and you just look at what they call revolving credit card debt. I'm learning
Yeah.
these terms through
Yep.
Mortgage Gumbo, basically. The part that actually stays on and people have to pay interest on per household, $7,486.
So that's the number I want people to understand. That's if you're paying your credit cards off every month, good for you, right? The big number is when you look at average per household is over $7,000. That is a tremendous, tremendous number.
Well,
Okay.
and it's not just a high number, it's concerning because that number is up 29% from 2021 to last year.
Yeah. I
So
mean,
that
yeah.
means people are living off of these things.
Yeah, I mean, well, and that is the biggest thing, right? And when you're looking at that, as you look at it, that's the case in point right there of letting you know that it's, and a lot of it may not even be folks who are thinking, hey, I'm not spending as much. Well, you are. And the unfortunate part is, or maybe you're spending the same, James, but your payment's higher. Why? Because the Fed, right? The federal funds rate's higher. So those margins, the numbers that the credit card companies use to determine your payment is higher. So that same amount of debt, you're now paying more for it. It's just like housing, but it's just like, hey, when house prices go up, or if the interest rates are higher, when the interest rate, we told you affordability on homes is coming down. Why? Because we're starting to see interest rates come down. Mortgage debt is a good thing. There's good debt and bad debt. Revolving debt is not a good thing when it gets out of control, right? We tell you, how do you get your credit score? We're going to talk about all that next week. You need revolving debt, but it's being able to control it. Control it.
Well, see, no one's rushing to call in and admit that their credit card debt is out of control, or their debt, if you roll in the house and the new car and all the other things they're paying on furniture and whatnot. You know, it sort of feels like that friend of the family that has a drug problem. No, I can quit at any time. I have it under control. It's not a problem. You know, it's not like I'm losing my job or I'm going bankrupt.
Right.
But
Right.
it is a problem, and it's not something because it's embarrassing, and you don't brag about it, and you don't talk about it. You don't go to your friends and say, "Hey, man, I sure am doing horrible with these credit cards." But someone's having problems because if that's the average, that means half of households are above that. We have interest rates going up according to Lending Tree. The average credit card interest rate is now 19.33%, and that is up. The amount that people have in revolving credit is up 30%. Interest rates that they're paying on it is up as well. This is someone's in a downward spiral and just not admitting it.
And that's the thing. And that's where, again, that's with this show. Don't get yourself in trouble because you're bragging about a number on a piece of paper. These are the numbers on a piece of paper that we want to be concerned about and we want to help you with. Because the one thing clients do have right now is you still got a ton of equity that you could take advantage of, right? So keep that in mind. But what I think is also, so the elephant in a room is, yes, it's the credit card debt is going to get us in a lot of trouble. The other thing is student loans because so many folks right now, everybody, student loans have now been deferred for almost 3 years. 3 years, student loans have been deferred. So
Oh,
it's
there's
not
a
a
stat
matter of,
on that too. The average household is carrying $58,000 in student loan debt, and that's scary because my household's carrying zero. So someone's carrying my portion too. And that whole time that they were deferred from 2021 to 2022, the amount of debt only went down by 0.6%. So they didn't take advantage of the deferral time to pay it down.
well, absolutely not. And who is, right? I mean, Sears didn't build the biggest building in the world and have the biggest, tallest building in the world for a long time. You know what they did it by? Sears, your big payment was $10 a month, right? So everybody's deferring, right? And so think about this. They deferred all the student loan payments while mortgage rates were at 2.5 and everything else was at zero. And what did people do? Nothing. Nothing. And I get you're hoping, and look, for a lot of people, if they wipe it out, whatever, without getting political and all that kind of stuff, but nothing happened. So that debt is still there. And when that debt comes into play is when you go, hey, I'm ready to buy a home, right? Because then we can't, yeah, maybe no interest is accrued, but you know what's unfortunate? The payment hasn't reduced. You haven't, none of that stuff either. So that's what we have to deal with. The other thing is, what does it come down to, right? I mean, all these decisions that's made in the world, we want to believe everybody's looking out for us. We do. James, I want to believe that those folks we vote in are looking out for you and I and all the gumbo nation. I really do, James. But how much money are these? Do you have that stat of what are the credit cards making real quick? And we've got a minute left. So I just kind of wanted to, if you think right now, Capital One, Chase, Synchrony Bank, Synchrony Bank every month on average, the credit card, if you've got them, they make $260 off of you. Discover makes 209. What is that? Come on, what is that third one? I can't read that.
Community? I don't know what community is. That must not
Whatever
be
it
the
is,
one.
guess what? They're screwing you because they make 383 a month off of you,
That must
right?
be
So
the
I'm glad I
Northeast.
don't know who that is.
Yeah,
But Capital
Capital.
One, $206 a month. So if you think those guys are calling Jerome Powell right now this week and saying, hey, don't go up on the federal funds rate, you're sadly mistaken.
All right, I got
Sadly.
one more headline here. Why do we talk so much about this on Mortgage Gumbo while we talk about credit cards? Here's
Hey,
the
we'll
headline.
cover. Hey, let's cover this on the Hump Day Holla.
Okay.
We up against the end. Till next week, Gumbo Nation. Keep stirring the pot.
All right, you want to do a little bonus show?
Uh, hold on. All right, yeah, have him give me a shout and just let Greg and Angie know what's going on. All right.
I told her, I said, yeah.
All right.
So,
Thanks, bro.
okay, cool.
All right. Later. Bye. No, James, because I got time. Let me handle all this, man.
All
Take
right.
care, Gumbo Nation.